What is SIP and what are its advantages? Meet Ashish. With his salary hike, Ashish was determined to start saving. Ravi, Ashish's colleague and an active trader, suggested SIP. Ravi explained. SIP or Systematic Investment Plan is a disciplined method of investing in mutual funds. You can build a portfolio by investing a fixed amount of money, say 1,000 rupees at regular intervals, monthly, quarterly or annually as convenient. SIP offers many benefits. It is wallet friendly and inculcates discipline, hence ideal for new investors. It's hassle-free. Once initiated, the amount is deducted automatically through ECS. You buy mutual fund units at various prices, so you don't have to worry about timing the market or market fluctuations. This helps you get better returns. In lump sum investments, you have to save for a period and then invest the amount. With SIP, Ashish starts getting returns from day one, experiencing the power of compounding at its best. To leverage these benefits, Ashish is now ready to start investing in SIP.
Easy. Investments in securities market are subject to market risk. Read all the related documents carefully before investing.